Well, Shein is the next household known company expected to go public this year, but it may not list on the New York Stock Exchange and is instead reportedly opting for the exchange across the pond in London. Here with the latest, we've got Yahoo Finance's Rachelle Akuffo. Rachelle, so U.S. investors here tracking Shein, trying to figure out where it's going to list.
Indeed. So we have to take a step back here because Chinese-founded fast fashion retailer Shein is expected to list its $63 billion IPO on the London Stock Exchange this week. That's according to reports that started with Sky News. Now, this would actually be the biggest in the history of the LSE after US regulators pushed back, citing their concerns about forced labor and the environmental footprint. These are allegations which Shein has denied, but UK lawmakers still have their concerns, so we'll see how this plays out, despite Shein making its reselling platform available to Europe and the UK to alleviate at least some of the ESG concerns. But now to the bread and butter. Depending on how Shein lists, here are the top 5 ways that US investors can buy in. You have international brokerage accounts, American depository receipts or ADRs, mutual funds and exchange-traded funds or ETFs, direct purchase plans, and foreign account services international brokerage accounts as well. You can open these with firms that offer access to foreign stock exchanges. Some of the most popular include interactive brokers. If we're starting with the brokers here, you have Charles Schwab, Fidelity Investments, E-Trade. Another option is ADRs. So if Shein issues these, that US investors can buy these securities. Now they represent shares in foreign companies and trade on US stock exchanges. They're convenient, and it also avoids the headache of worrying about foreign currency or exchange issues. Now, according to the US-China Economic and Security Review Commission, as of January 8, 2024, there were 265 Chinese companies listed on US exchanges with a total market cap of $848 billion. So this is obviously a very popular way that a lot of Chinese companies tend to list here. Now, you can also invest more broadly with mutual funds and ETFs that focus on international or specific regional markets to get that indirect exposure to Shein as well. You also have direct purchase plans. Now, some foreign companies offer direct purchase plans to buy shares directly from a company without using a brokerage. Now, we won't know if Shein is providing such a plan until after its IPO, and you need to check the kind of protections that comes with. There's also foreign account services like foreign stock purchase programs. Now, these are provided by some US banks or financial institutions, and they can facilitate buying and holding shares of foreign companies as well. Now, be mindful of that conversion rate, though, from dollars to pounds sterling, so you don't get some sticker shock there if you try and buy shares.
So what should investors consider if they go the brokerage route then?
Well, there are some things that you can compare. First and most important, check market access to make sure that brokerage actually includes your desired international market. Another thing to do is compare those fees, commissions, and cost structures, especially given the currency conversions to keep in mind. Also, make sure the trading platform is straightforward to use and provides analysis, data-backed research, and reachable customer support so that you have an understanding of what you're buying, and if you have questions, you can reach out to someone. And of course, check the regulatory protections and insurance coverage provided by the brokerage as well. That's in case of any trading glitches or unforeseen circumstances, so at least you know what your recourse is, Brad.
All right, Rachelle, thanks so much for that breakdown. Certainly appreciate it.